Ladies and gentlemen of the crypto space, we're live on a Monday at 11:28 a.m., February 8th. The market is absolutely fire. We got a hot topic today. We got to look big picture. We got to look macro. We got to look micro. We got to look at a bunch of markets. We got to do what we got to do to understand the system as a whole and to position ourselves in front of the massive freight train. Not that, it's good to actually be in front of a massive freight train as it's coming through, but I think you all get my point. We want to be where the market is going to be in the future, not where the market is today. And that's the positioning we look for to achieve maximum the optimal outcome is probably best said. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got Igor in the house. What's up? Light crew starting out, but I know it's going to get busy. We got hot topics. Let's check Twitter and see if there's anything interesting. Um, Crypto Messiah posted very interesting. Oh, I don't know where it went, but he has some new data that is quite meaningful with regard to Rook, and it just substantiates what we see from the chart technical analysis, and we'll see no doubt more data to come over time, and we place our risk on bets accordingly with proper position sizing, proper risk consideration, and that's the whole point of what happened this morning. People were liquidating altcoins to chase the Bitcoin pump. And by the time the transaction probably cleared, Bitcoin was already pulling back. Now, we could take a look at the Bitcoin chart, but let's start with some macro. Macro is probably the best place to start, particularly because it governs all markets, not just the crypto space, but the broad equity space as well. Clearly, we don't dive into equities too much. We've talked about them, especially my picks in particular. But we're all more interested in the crypto space and how the macro markets affect it. So we're on track for the reflation narrative in most respects. There is a crossroads, no doubt. I mentioned this the other day on Twitter, and it could go in one direction or the other. And that's essentially the position we're in right now. What's very meaningful is that on the weekly, the long end of the yield curve broke through the 100 SMA on the weekly. It's right now retesting. So, clearly we're overbought on the Stoke. But if you go down to like the 30-minute shorter term time frames, you see that the Stoke is completely oversold. And we're also sitting on the 200 EMA, which is converged with the 200 SMA below the 100 SMA on the 30 min. Now, that's why it's on a crossroads. It's at a crossroads. But bear in mind the long-term moving averages carry more weight and are more powerful or meaningful or more effective than the shorter term moving averages. So what's notable is that it's interesting. It's interesting that we see significant support below on a shorter term time frame, and on the weekly, we are also in most regards sitting on the 100 SMA as support. Now, if this thing starts to move up, that's just more confluence, more bullish confluence, suggesting further yield rise, and that is conducive with bond selling, which is consistent with the prevailing or historic reflation narrative. Obviously, to really understand the reflation narrative, we have to look at the entire yield curve. So, for the purposes of the stream, we look at the 2-year and the 30-year for broad spectrum. So basically, this is flatlined and it's hovering above support. Stephen Van Meter had a great couple of podcasts last week discussing this. He thinks we're on the verge of a liquidity crisis, and I can't argue with entirely with his sentiment, his rationale, and his logic. He is on point and extremely experienced and knows much more data or where to find data than I do. It's just not something that I think I need in order to execute my primary portfolio management strategy. So my sentiment is that this would be rising right now under normal conditions. What are normal conditions? So the point being, what is occurring um, is oh my God, what's the word? The market is oh, I can't believe I can't forget the word right now. The market is displaced. It's the Fed is distorting. Oh, finally got the word. So the Fed is distorting the market with its stimulus, aside from what the Fed is doing with regard to bond purchases and other asset purchases, the equities and those types of securities. But we're talking about straight up T bills at this point. Aside what they're doing with regard to T bill creation as well as consumption and purchasing. The distortion I believe that we're seeing is the reflation narrative, but the short end of the curve is being suppressed because of 2020 and 2021 retail public facing stimulus. So the amount we know in data that the amount of deposits from the general public in banks is through the roof in 2020. So my gut speculation says banks are front running the next stimulus check. Um, so what we're seeing is the classic reflation narrative with the considering the distortion of the Fed and plus Treasury monstrosity, injecting liquidity now into the general public twice, three times. Was it? This is going to be the third time in 2 years, triggering a massive increase in deposits, which banks when the cash comes into banks have to acquire they opt for short duration bonds as the hedge that where do you think the 0.0000001% interest comes from on savings accounts. So that's generally speaking the way banks operate. So, in conclusion, I think we're seeing mostly the reflation narrative. We're seeing a distorted market where a typical rise in the short end of the curve is being suppressed because of the need of banks to front run the stimulus that's coming. So keep an eye on the oscillators, keep an eye on the trend lines, the price action support, so to speak, or the yield action support on bonds, but definitely the moving averages, so on and so forth. So that's why the stock market, equities market, the broad equity space has responded the way it did. Clearly, the crypto space was distorted this morning in good part because of Elon Musk basically locking in the S curve narrative that Willie will so incredibly talks about so well. Um, but that's not just the reason the crypto space is rallying. The crypto space is rallying unto itself. But what happens when you throw gasoline on a fire, in a positive metaphor that shouldn't be taken negatively, it's extraordinary what's occurring. What's even more exciting and real is that crypto broadly is the least inflated asset class of everything. Now, there's a good portion of the equity space that's not inflated as well. Clearly, tech equities are historically inflated beyond recognition at this point. They're all in massive span wedges. They're just basically straight up and vertical. So we must question technically as well as fundamentally, for that matter, because the valuations are not supported by the cash flow of the businesses. That there's at some point will have a correction independent of the liquidity and the distortion that the Fed induces. It'll just be a raw technical correction, and it'll be exacerbated by the majority of participants being retail that are incapable of sustaining any degree of meaningful depreciation. Listen, if retail, this is what happens. You get a 5% dip in the market, 10% dip in the market, and if no one buys, that's when the emotions start kicking in. And we're talking about human beings. Human beings are programmed. Every grossly, broadly, stereotypically, humans are predictable. So if no one buys on a dip and then people get fear that it will go horizontal or continue to depreciate, at some point, I speculate that the broad inflated portion of the equity space will experience the classic cascading liquidation event. But I think that's going to be mutually exclusive from the overall macro conditions that are leaning towards the reflation narrative. So we'll have a massive, massive technical correction in the broadly inflated equities market. We'll have a a redistribution of value from overinflated assets to not just non-inflated assets, but ridiculously underinflated assets, and the redistribution of value will head into commodities, mining, um, metals, no doubt, probably materials, construction companies, and as they pursue infrastructure bills, no doubt they're going to do that at some point. So I think that's the direction that the value is going to head. And this makes sense because that's also consistent with the just physical law, the flow of value, the flow, what gravity does. Gravity redistributes potential energy into kinetic energy. As you raise something up, it's gaining potential energy. As falling down, kinetic energy is released and emitted or consumed, so to speak, producing the downward acceleration. Um, and that just by natural law is what should occur in the broad inflated equity space, and that value redistributed to lower states of energy. If I find myself talking like Michael Saylor recently, but lower states of energy, assets with lower potential energy, assets that have yet to inflate, that have enormous industry wide, world changing significance to the energy transformation narrative, the financial restructuring and evolution narrative. I mean, Tesla just threw the Bitcoin on his balance sheet. Everyone's going to throw Bitcoin on his balance sheet, aside from the fact that it's designed to protect wealth. They're going to freaking throw Bitcoin on his balance sheet because what it does to their share price. It's a no brainer at this point. And that's just obviously what's going to play out because every CEO has the sole responsibility to their shareholders to inflate their share price. Obviously they try and do that by using legitimate means, but there is nothing not legitimate about simply making an asset purchase, throwing it on the balance sheet, especially with regard to MicroStrategy's playbook that they published. It's now easy, it's now defined, the process is transparent, established, there's precedence, and guess what? The most important thing, the effect of merely engaging such a policy has proven to have a very specific result, which is exactly within the mandate of all corporate executive officers. The flow of value, the choices these people are going to make, all fundamentally boil down to humans, emotions, logic, and reason. And this shit is obvious at this point. Absolutely incredible. Let's see who else is in the stream. We got Bitta in the house, Crypto Chicks in the house, White Wolf's in the house, Craig's in the house, Graham's in the house. Did Elon pump Dodge to subsidize Bitcoin? I don't know, but I don't know anyone in their right mind that would buy Doge. Jason, good morning, everyone. Fun morning. F gas is yikes. It's incredible, and it's not to be thought of in a negative way. Yeah, a loop ring if you want to trade on L2, but gas go to what the gas price is incredible because I know almost everyone that follows me and the vast majority of the market, no doubt, is priced out of interacting on L1, but that's irrelevant, unfortunately. For the time being, because there are 45 million millionaires on the planet, and that's not considering family offices, hedge funds, and other large sources of capital that want to be applied to this market. It's basically zero. So if someone's throwing around $100,000 transaction, $500 they don't care about. Someone's throwing around a $5 million transaction, $500 they don't care about. So $500 transactions are trivial considering what's occurring in the broad DeFi space, particularly with regard to yield opportunity, lending and borrowing opportunities, leverage options, synthetic opportunities, and just from a disruption potential and a value allocation perspective, applying value to assets that have an extraordinary potential to experience asymmetric price appreciation. So these boys, the big boys, are getting into position. They're deploying value, and they don't care about $500 transactions. Bam! That's the bottom line. Ear ends in the house. keeper Dow hiding game arbitrage bot yet? I myself no. They don't have ledger support at the moment, but that's all coming. I'll get into the keeper Dow soon. I got the charts up. That is my only risk on play, as I mentioned to many a persons. Um, I'm currently over positioned in it. None of the position is underwater, but I look forward to rebalancing the portfolio in a more price opportune time to reflect my strongly held beliefs about portfolio balance, the ratio of risk on to risk off, and to my opinions with regard to proper position sizing. There is no doubt the position sizing rationally should be overweighted as compared to many other assets, especially considering the technicals that I'm seeing, as well as the fundamentals of where it fits into the broad DeFi space and the functionality it provides and the potential it has for further asymmetric price appreciation. Charlie G in the house, 30 viewers, 14 likes. Hit them like buttons. 34 people in the stream. I see 17. We can do better, folks. Retrospectively, Craig, anyway, it was a lighthearted. Yes, we're all lighthearted here, boys and girls. We're all just trying to make better choices to do better for ourselves, our friends, and our family. Charlie G, Cash Holdings, Apple. 191, 130. Man, they got so much cash. Listen, cash is useless. It does nothing. It literally just bleeds. Cash is the last bag that nobody wants to hold. If you're going to deploy it, sure, dollars are an incredible vehicle for value transfer, but it is a failed unit of value storage. I think that is just undebatable at this point in time. So they're going to deploy their cash because you can't just have 191 billion losing $19 billion a year, either due to pure dollar depreciation or the impending broad spectrum asset price inflation that's going to occur, consistent with the reflation narrative and the amount of liquidity injected across the countless parts of the system. That's just the bottom line. Pablo's in the house. Jason tried loopring zero liquidity for rent, unfortunately. Yeah, just use Uniswap. Oh, I'm sorry. That's an L1. I understand. Use 1 inch exchange and have some chi, wait for gas prices to drop, and buy chi when it's cheap. And then you could use chi when it's cheap or expensive, and you're still getting an extraordinarily discounted rate. Portfolio velocity, dispersion of risks. Noah can actually fly. I mean, I'm doing well. I don't trade. I don't go in and out of positions. I have portfolio allocations. At best, when I see rebalance opportunities and making micro adjustments. I haven't made significant modifications to the portfolio, and I can't even remember how long at this point. Cash is trash, is completely useless. That's right, Crypto Chick. Crypto Monk for Rook. Do you have a price targets in ETHUSD where you scale down about, yeah, it's probably somewhere between $1,000 and $1,500. I see no reason it's going to hit some significant appreciation in the short term. Let's look at the charts. Oh, so the bottom line is Rook is extraordinarily on trend. This is one of the most incredible chart series of patterns I have ever seen. This is a cup and handle, uh, followed by a massive resistance flip support line for 23 days at this point, a falling wedge, and this morning was absolutely incredible. So people see this bearish price action. What do you think I see? I see validation of the falling wedge. We have multiple hits on support and now the third multiple hit on resistance. Clearly, if you have two hits early on in the wedge, you're like, what is it going to do? Is it a wedge? Is it not? Or is it just random price action? But this hit right here is full on validation of a falling wedge, sitting on top of resistance flip support, following a cup and handle, including a damn triple bottom. You gotta be kidding me. I've never seen anything like this. The amount of bullish indicators in such a short period of time is nothing short than extraordinary. I've never seen anything like this. And to top it all off, if you look at the daily chart, Stoke is completely oversold. You have a bullish signal cross that at some point is going to occur. Look at these incredible wicks to the downside. So you got like 20 days of massive wicks to the downside with resistance flipping, support holding on each one of them. This is a massive rotation of value, a cost basis reset, and then you flip to bullishness where people were just fearful. This is more fearful wicks, where the bullish rip to the upside, people were fearful that it was going to not break out, and that's why it pushed back down. But both of these wicks, all of them, all 22 plus days, are completely conducive with the concept of cost basis reset. And basically, where we're here at the bottom is I would say, is probably the final shakeout. If you take a look over here, you got, if you consider resistance flip support, which, I mean, look at all of this support on this green line holding for all of these days with three fully interacted touch points. Um, you know, trend invalidation would be to the downside of the screen line, and you'll still have the falling wedge, which could play out, but we could have significant depreciation considering the slope of support and resistance of the wedge. My eyes and my speculation are on green support and trend resistance for this falling wedge, which gives us approximately 2 days or less maximum for a potential breakout. There's no way you're going to get down right into this tip. It never happens. So my gut is 2 days or less. That's the best way to describe the time frame in which we are so much more likely to see a breakout versus a breakdown. And that's the whole point. That's what technical analysis is. Technical analysis gives you details, gives you data, allows you to gain an edge by having indications and multiple indications contributing to confluence, suggesting bullish or bearish price action. And at this point, whatever, it could break bearish, it could break bullish, but this is how you play the game. Use data to establish confluence, suggesting the bullishness or bearishness, and if it breaks bearish, it invalidates the trend or a micro trend, one of four extraordinary bullish trend components to the overall trend formations that we're seeing. And that's the way the game is played. The game is played, it's a bet, and it's a bet based on rational analysis of the data that's highly suggestive of a trend reversal to the upside. That's the way this stuff goes. The last psych ward I was in, most ill person there would walk around saying cash is king. My man, we love you, Lewis. We really do. And it's all going to be good. We're always here for you, my brother. John's in the house. Noah for president. You rebalancing risk, asset allocation, taking profits in the Bitcoin. What a great strategy. Must retool to do the same. Now, bear in mind, there's degrees of risk and there's degrees of risk off. Bitcoin is the ultimate crypto risk off, and the fact that you get 3 to 6% yield on it with a annualized depreciation schedule of 200% based on 10 years of history, fucking a, that's some shit. Now, bear in mind, speculatively, I would say good portions of providing liquidity is relatively risk minimized, especially when you're talking about macro assets. Dare we say one-sided liquidity in the Bancor pools? I mean, you throw Ethereum in the damn Bancor pools. Throw Ren in the Bancor pools. It's incredible what you could do with the tools and utilities and specifically the AMMs that are available. I mean, Sushi is just absolutely on fire. The VE Curve Onsen pool and Sushi has been cranking out. When it first launched, it was like 1,100% a year. It's down to like 320% a year, which is like 30% a month. It's on a whole nother level. And Sushi, to top it all off, ripped 22% this morning. This space, the monetary velocity is vertical. The activity, the trading, the lending, the borrowing, the movement of money. Now, you could get into the technicals of how the broad M2 velocity is calculated, but conceptually, mental imagely, I'm going to use that word, make it if I need to. Velocity is freaking stuff moving around. That's what it means. The velocity in the DeFi space is vertical, and the M2 broad velocity of the United States dollar is collapsing. There's no other way to describe, one, the chart, two, the data. It's collapsing. And frankly, we're all on the edge of our seats for probably Q1 data to show up on Fred. But if you look at literally just late 2020, frankly, all of 2020 and late 2019, it was collapsing before the pandemic. Our current financial crisis has absolutely nothing to do with the pandemic. It was not started by the pandemic. It was not caused by the pandemic. It was exacerbated and inflated because of the pandemic. But the current financial crisis started in September 2019, as indicated by the failure of the repo markets. Banks stopped lending to one another because there's too much risk. Risk is associated with debt. Risk is associated with lack of trust. If you don't have trust in a financial system, the system fails. The system is in the process of failing. That is what they're doing at the Fed and Treasury level. They're trying to inject trust into the system. It will not work. It's not possible. That's not the way human beings work. So what do we have in the DeFi space is basically a trustless system. And what's emerging with stuff like Nexus Mutual and that the YFI, Yearn Finance exploit on the legacy 1.0 pool was incredible to see. Not because of the loss of value, but because there were insurance claims filed and approved against the loss. This is a functioning financial system. Nascent, I'll give you that. But what is emergent is a functional financial system that makes the legacy financial system seem inferior. Um, I go as far as to say, unfortunately, a bit derogatory, it seems pathetic. It seems like the vast majority of the world is using like COBOL systems. It's just like, what are they doing? What are they doing? And everyone that's invested in this space that has value applied to the space, especially persons that listen to me, you are the smart money. You are ahead of everyone. You have front run all of legacy finance because when something better is available that makes the original system seem deprecated, that is the process that plays out because better is more profitable, better is more efficient, better is more viable, and better is more desirable. Nobody wants to use the shit product compared to the awesome product. And that is the foreshadow that we have right now. That is what the data we have from 2020 that empirically proves the case, only amplified with what's going on in 2021, supported by macroeconomic conditions. Legacy finance is literally buying into the crypto space at an extraordinary rate. Everything up until now is a foreshadow. This is all a foreshadow. This is not the market. This is barely the beginning. That's just what I see. It's obvious. Digibyte's on the move. It has another 60% to rip to the upside before it gets to the 200 EMA in the weekly. I was looking at it shortly ago. Love my Digibyte. Fundamentals tell you where to look. Technicals tell you when to look. Buy things once they are above all the long-term moving averages on long-term time frames. Lock in that bullish confluence. Strap in and enjoy the ride. I beg to differ. Cash still buys Bitcoin. Cue the Clint Eastwood cringe gif. That's what I'm gonna. That's what I'd post in here if I could. Where's Twitter gifs when you need it? Care to take a guess as to which asset hits 2 trillion first, Bitcoin or Ethereum? Yeah, I love that debate. I love Bitcoin and Ethereum. It's a hot debate. I myself personally lead to Bitcoin as the store of value, and Ethereum is overwhelmingly cash. There's arguments to be made that Ethereum is an incredible store of value, and dare we think about EIP 1559 or the value prop of Keeper DAO, and even more so Ethereum 2.0 and a burn component where the inflation is compensated by the burn component, producing a net deflationary pressure. Ethereum has the capacity to produce enormous asymmetric returns, and what that means to me, when something has the potential for more pronounced asymmetric returns, you want less of it in your portfolio because your portfolio needs to be balanced. And one of the big reasons I strongly subscribe to that methodology is because it's counterintuitive. It's not contradictory. It's contrarian. And sometimes you got to go contrarian, and that shit just makes sense. You know what I'm saying? John knows what I'm saying. Opinion on Uni. So Uniswap, I wish they had a revenue sharing component, but Uniswap is literally they must have billions upon billions of dollars in their treasury at this point. I think you know Curve is like I think democracy and FX and something special is going on with Curve, but Uniswap, I get the sense, is gonna be like fully self-funded. They're the titan of the AMM DeFi space. Um, 1inch, I think, gut instinct, they went corporate, which is completely viable, and their platform is extraordinary. Up and coming is uh, 0x. They are completely vertical on their growth of volume, completely vertical. Maka is incredible portal, and they are definitely non-trivial. Bancor is the first AMM from 2017, maybe even earlier, but Bancor is not to be neglected. Price action aside, fundamentals tell you where to look, technicals tell you when. Bancor has the vortex coming, which could produce a very meaningful depreciative effect on their asset valuation. My Bitcoin and ETH are staked on Celsius, producing more Bitcoin and ETH while both assets continue to appreciate. That is straight from the Simon playbook. Bam! That's how you do it. Risk on, accumulate, risk off. Because one day you're going to want to take a little bit of a vacation. Risk off. You're able to sleep at night. And the insane reality is that crypto risk off, you get in Bitcoin 200% annualized appreciation and 3 to 6% yield. I don't have any words at this point. That's crazy. Stream record 43 persons on the stream. We got 40 currently, 22 legs. We can do better, folks. Charlie G. Laughing out loud. No, White Wolf, Noah, can you repeat what you were saying about throwing Bitcoin and Ethereum into something on Bancor's crazy. Bancor has impermanent loss protection. You throw single sided liquidity into their protocol and you keep it there for like, 1, 2, 3 months, you're just going to appreciate without impermanent loss. Bancor's on another level. Keep your eye on Bancor. Keep your eye on 0x. Don't forget about Kyber. Same thing always applies. Fundamentally, that is probably one of the best designed tokenomics policy I've ever seen. Deflationary and incentivized supply disruption. It was always extraordinary. Fundamentals, you have to look at it. And technicals just tell you when. Kyber ripped 1,000% in early 2020. Obviously ending in September along with the rest of the space, but it's Kyber is not going anywhere. Those boys are working on the protocol. They made some serious improvements recently, and it's definitely not to be neglected. There are some extraordinary protocols out there that are going to be part of significant infrastructure, pretty much undoubtedly at this point. Crypto Monk, what would you have any use for something like a Polka starter? Not for me. I don't care. I don't want startups. I want stuff that has data. I want stuff that I can really process fundamental. I don't like to take on risk. I want risk off. I mean, listen, Cosmos just ripped like what 40%. I mean, guys, you don't need to look at. You're looking. A lot of folks predominantly look at price points. I mean, seriously, where is it? I mean, guys, it's ripped 15%. If you put 10 grand in there, you just made $1,500. Sushi, six. Oh my God. I know it's $14 per, but you don't need 100,000 of them you get less. But what matters is the percents that are occurring in and out of a daily basis. And you can take risk on in this market, pretty much broad spectrum, and relatively reasonably get significant daily gains going in and out of positions. It's not something I overwhelmingly advocate, but that's something that countless people do. I mean, don't do the leverage game. You're going to blow your entire portfolio. But there's no reason. Look, sushi 60. Wait for it to dip. Just wait for it to dip, and you'll get another 16% in a day or two. That's what happened in 2020. Um, 17%. I mean, these are brand names. It's not even like you're betting on something that's relatively risk on. Now, here's the thing: Digibyte, I love my Digibyte, but historically speaking, what goes straight up comes straight down, and this shit is straight vertical at this point. So that's why you got to consider technicals, very significant technicals. But bear in mind, look in the weekly. That straight up is not really straight up. So let's look at the 15 min. Let's look at the 3 min. All right, fine. Maybe it's not so straight up. But what goes straight up comes straight down. That's the most important thing I could try and teach everyone. Oh, wow. Look. Decent symmetrical triangle. Oh, no, it's not really that sloped that well on the support. But we have a bullish 50 SMA cross of the 100 SMA. We got the 200 EMA, the 200 SMA on the incline, and 3 min, which is a really short-term time frame. I mean, generally speaking, it's quite bullish. I look for long-term bullish confluence on the weekly. You wait for it to get to the 200 EMA, which is another 60% rip to the upside. And in the meantime, you got assets that are doing ridiculously well, and they're brand name blue chip, so there's minimized risk as compared to bull coin on Uniswap. So don't waste your time with garbage. Seriously. White Wolf, my man, Crypto Monk. Yeah, yeah. Crypto check. Noah, if you were building a yield generating wallet, what would you invest in? Predominantly Bitcoin, Ethereum, was it what's Lido Finance. Probably a combination of Lido, which is allows you to capture value from Ethereum 2.0 prematurely before the F2.0 system fully launches in a couple of years, and their logic and their implementation makes sense. So you could speculatively apply a bit to Lido Finance. Listen, the Bancor liquidity pools are crazy. Sushi Swap is absolutely crazy. I mean, look at this. You guys see this? 319%. It's been it dipped down to like 290, is back up to 320. This thing has been a solid 300% to 1,000% for the last 3 to 4 days. I mean, do, do, I mean, this is literally 3 days, 50 sushi. That's crazy. So onsen is crazy in Sushi Swap. And the value of sushi is going up because two-thirds of any emissions are locked in escrow for 6 months. So they've applied very reasonable game theory, which has empirically proven to be effective at maintaining and allowing appreciation of the asset's price. And that's extraordinary. So game theory is great and all, but you need empirical data as evidence to suggest whether it's actually functional or not. And that's exactly where I'm going to end this stream. 2020 proved that a lot of this game theory really, really works well and is driving a monetary velocity with lending and borrowing and transactions and incentive systems that literally create value. And that's extraordinary to be able to create value in a day and age where, the legacy financial system is metaphorically crumbling. Neil, my man, then right, mate, if you shoot a rocket or satellite straight, okay, yeah, my man, so, okay, you know what? The metaphor was that's S curve adoption. So, and I think about that often. So, what's the distinction between uh, um, what looks like a bubble? What's the distinction between a bubble and adoption? You're not going to be able to see the difference until it actually occurs. And if you want to really understand that, you got to look at Willy Woo's data, and that's where you're going to start to see the stars aligning and the confluence suggesting that over the last 10 years, we're finally reached critical mass where Bitcoin has left the atmosphere and is in orbit. What goes straight up does not come straight down if it's being adopted by a large enough portion of society. And that's Bitcoin in the broad crypto space without a doubt. Thoughts on paid network, solid upswing last launch? I don't know anything of it. It sounds cool. It's good to get paid. I don't know anything about it. You can't own everything you want to own. I mean, just looking at this top man, I don't know what Terra is, but it sounds good. Elron, I wish I had a nice position. This thing's been killing it, but it's okay. Good for them. I'm happy for folks that got in cheap on Elron, but this thing is incredible. This is one of the few alternative L1 networks, aside from Cosmos and Polkadot, that actually has what's needed, and an incredible social media presence and transparency that is far superior to a lot of other products. But I can't own it. I'm priced out. I couldn't have the position I want, and I'm very happy for anyone who has Elrond. I'm jelly. I wish I had an early position, 100, $200 million before it ripped, 10, 20, 30x. So, you know, incredible. Digibyte, love that. Digibyte, Thorchain, are they still releasing testnets? Matic and L2 solution. Big bull on L2. L2 is a big deal, but I think what will end up resulting is a market that's filled with L2s that are uninteroperable with one another. You'll have to have, like interoperability solutions that transfer back to L1 to get on another L2, and frankly, it just creates a goddamn mess. So that's why I'm so darn bullish on Keeper DAO, because I think what the market really needs is a very powerful, an effective L1 solution for retaining value during a transaction by capturing MEV, minor extractable value. I don't know. What is this? Isn't this SBF's Solana? I don't know anything about it, but whatever, 85% for a week. Look at these damn numbers. Pancakes? Well, I don't know about pancakes. Doge, antithesis of anything a rational person would ever purchase. Not something I've kept up with. The cred is old school. It's good to see old school in the top charts. Good for them. Aave is going to be one of the most important corporations on the planet once they eventually incorporate. If they do, maybe they don't give a shit and they just want to buck trends and do down with the old system type stuff. But this is one of the most important protocols on the planet right now. There is no other DeFi protocol that does anything the way they do it. Um, they stand out. Absolutely unique. I got to resort. Sorry. Let's go down the list a little bit. Let's have some fun. Um, Sushi, after SBF picked it up, man, the game theory is spot on. The token escrow, the emission schedules, the incentives is driving value to the sushi asset. Is driving value to the assets you're able to provide liquidity for, particularly because VE Curve had no liquidity, and he's this just by merely being added to Sushi, it was promptly added to Pickle Finance, and the amount of liquidity that popped up for VE Curve is extraordinary, and that just further supports the Yearn ecosystem. So. You can see how everything affects everything, and literally Sushi's action is going to make a lot of people value there. It's going to make a lot of people value on Pickle. It's going to just further reinforce the meaningfulness of the Yearn ecosystem. That's crazy. Kusama is red hot fire just because of its association with Polkadot. It's the canary network for Polkadot. Big deal. Not that I wish I had a position. That's not something I FOMO too much. Why can't I sort? I messed it up. I shouldn't have clicked on it. Oop, there we go. Let's go back to all right, we're going to stop it soon. And let's keep going a little bit. Polkadot Fire, multi-year narrative. This is Ethereum 2017. You hold this in this 2024, this thing's going to be $500, $1,000 a token. It's going to be absolutely crazy. Ontology, NEM, I don't know anything about it. 0x, we've talked about it. FTX, I don't know what's behind it, but cool because Sam seems to be doing things right. Graph, I hear good things. Not on my radar. Sushi on my radar. Fire. Ren VM. Ren team. Absolute fire. Cardano. Are they ever going to have smart contracts? And when they do, how are they going to compete with even Elrond, who's been moving ahead at incredible pace? So sure, something may come, something may emerge from Cardano, but they are late, and that is going to fuck up their network effect bad. Don't know anything about IOTA. Generally speaking, isn't that Internet of Things type stuff? Cool, sounds great. Algo, isn't that another L1? Kyber, we talked about it. Wrap Bitcoin, pretty much brother and sister with Ren BTC, and yeah, good stuff. This has driven the vast majority of the DeFi space's explosion. Nexus Mutual is basically a fundamental component of a functional financial system. Absolutely incredible what is emerging. And there we go. We're going to end on Curve. Hi, beautiful Curve. Oh, it's good to see you. $3.13. Absolutely incredible. See a coin. Look, we got some old school assets trying to make some moves. I mean, listen, this top list is incredible. The 24-hour sword. I just want to say thank you for crypto check. $5, much appreciated. It's good stuff. I'm always here. I'll be here every day, weekdays, because that's the way we do things. YFI, goodbye today. I can't talk to entries. I don't have a feel. Um, it takes a lot of analysis to figure out when to apply value, but just remember to always respect your portfolio, apply reasonable position sizing, have reasonable risk analysis, and think about how you're balancing your portfolio. Just remember, look, alts were dipping this morning when Bitcoin was absolutely ripping. If your portfolio was going down at any point in this morning, you have an imbalanced portfolio and improper position sizing. That is something very important to consider. We need to learn to appreciate depreciative events because they highlight the amount of risk we're taking. In a relatively reasonable bull market depreciative event, your portfolio should be going up. It doesn't matter if some assets are going down. It doesn't even matter if on a day you're down 5, 10, 15%. What's pertinent is on the weekly, and what's pertinent is on the macro portfolio perspective. Your portfolio should be growing, some up, some down, proper balance, risk on, risk off, reasonable position sizing, not taking excessive risk in risk on assets. And that's how you change your life. Brendan, always a pleasure. Thank you, everyone. 12:15 p.m. on a Monday, February 8th. Another fire episode. 34 people on the stream, 28 likes. We can do better. Thank you very much for joining. Tell everyone to subscribe, and I will see you tomorrow. Peace.